Welcome back to Stocklabs for another market recap. We have finished the summer, so it's Labor Day weekend. August was meh for markets, kind of like soft. But the final week closed strong. I mean, I'm not going to read into it too much just because this tends to be an extremely light volume week as far as just participation. Everybody is focusing on back to school or winding down like sort of their summer deal or whatever. So really, you shouldn't take too much to heart for what happened this week, even though, I mean, it was a pretty good week for the indices. So, I mean, the first 3-ish weeks of August were kind of pretty nasty. Russell was down something like 8% or something at the lows. And NASDAQ was down 5-6%, somewhere in there for the month. But for this week, Qs bounced almost 4%, 3.75%. IWM was up 3.7%, so made back almost half of the month's losses in the final week. I mean, that's like pretty decent bounce. S&P up 2.5%, Dow up only 1.6%. And crude, a standout again, up 6% for the week. This is, I mean, similar to the way that bonds pressed up against some quote unquote key levels and then the market got really nervous about it. Crude is sort of in the same boat now because any incremental up move in crude is going to further pressure the rates even more. And then who can control the crude market? I mean, doesn't look like OPEC is helping out that much. They're kind of looking out for themselves, because that price is what they pay for everything in their entire economy for. So if they can't protect that price, then they're not going to just sit around and let $30 crude be the price because just to help the United States or just to help Western countries that don't produce as much or at all. Anyway, bonds down 0.4 this week. Not great, but bonds have been on a tear. The yields have been on a tear. The prices have been on a tear downwards. You're still kind of in that range where it's like anything could happen. You get some momentum players that come in and bust some key, again, quote unquote, levels in the market, and then it opens up another leg of momentum trading in the asset. So you got to keep an eye out on bonds and crude. I think for the next few weeks, these are going to, bonds already have been, but also crude for the next few weeks. Really got to keep an eye on it. Now, seasonally, crude tends to soften up toward the end of the year. I mean, summer driving season is, sort of like a peak demand type scenario, but we'll see. Yeah. So, and gold was up 1.4%. So decent week for gold. As far as our mega cap stocks went, they had a great week, as you would expect from a plus, almost 4% NASDAQ week. Apple was up 6%, Netflix up almost 6%, Nvidia up 5.5%, Google 4.5%, and then the rest kind of in line. So Meta was up 3.8%, Amazon up 3.5%-ish or more. Tesla only up 2.7%. This was the winner for the week until Friday, where it dropped 5-ish%. And then Microsoft up 1.7%. So Microsoft has kind of been, I don't know, seems like it's been not at the forefront of this group in a while, sort of just kind of waiting in the wings. This was definitely Apple's week, though. I think Apple's been up something like, I don't know, over a week straight, consecutive days up. So Yeah, it's been on a tear. And yeah, so nothing much to say. 4% as a group, over 4% as a group, really kept a bid under the overall market. If we look at our breadth, and just about every sector was up, with the exception of utilities. Median tech stock was up 3%. So actually, this is pretty good. This is a little stronger than what we've seen in the past. Sometimes you get these big NASDAQ up weeks, but tech as a sector overall kind of is trailing that. So this week you had some pretty good participation outside of the mega and terra cap tech stocks. Some of the smaller stuff was also participating. Industrials up 3.6%. This was the almost winner. Basic materials was the winner, 3.64%. Industrials up 3.63%. So again, crude had a big week. Materials stocks went along for the ride. Services only up 2. Healthcare up 1.3. I've been talking for probably a couple months now or more that healthcare is just a chronic underperformer. Just for whatever reason, it has not been, really in favor with what people are looking for in the market. Sure, you have some that have had really, fantastic runs. For instance, Eli Lilly has just been a monster, and some others too. But like in the overall space, not so much. Financials, okay week, up 1.8%. This is about as good a week as you're going to see from financials, just given that the betas tend to be a little lower, with the exception of when the regional banks blew up earlier this year. So consumer was also up 1.7. So, pretty solid breadth overall. Subsector wise, we did have a handful that were, this is the strongest breadth that we've had in several weeks. So we've got, what is this? Almost 20 sectors up over 5%. And okay, not that encouraging that cannabis is the top one. It sort of screams like shorts got squeezed here. But there was also some, I think there was some legislation that came out this week around cannabis sector, but that's like a perpetual thing. Always someone's about to legalize or something is, no longer a felony, but it's a misdemeanor or whatever. I forget what the actual news was this week. Semiconductors up big. We've got what else? Kind of a pretty decent smattering, across sectors, just camped out at the top. You see another semiconductor here. So, it's pretty balanced from what's leading, and you had a decent amount that were up over 5% on a median basis. So, if we look at breadth from a market cap standpoint, we'll go to 1 to 5 billion. Just get rid of this. 1 to 5 billion was up 3.5%. So that's right in line with IWM that was up 3.6, 3.7% from earlier. 5 to 10 billion was up 3.8%. Pretty good. 10 to 50 billion up only 2.6%. And 50 to 100 billion up almost 3%, with 100 billion cap plus stocks up 2.5%, which is right in line with the S&P. So, I mean, breadth pretty much mirrored the index performance, and so you could say that just about everything went along with the ride. Went along on the ride. The indices were up 2.5 to 3%. Average stock was up 2.5, 3% for the week. So, everything moved in tandem. Okay, maybe tandem is 2, and we have a lot of stocks, but you know what I mean. Anyway, the intelligence for this week. We've got gold miners bullish, Google bullish, bear China, got bullish Europe, EM, some kind of fixed income thing. I'm gonna ignore Germany. Double short gold. It's kind of the opposite of gold miners, and we've got gold miners again bullish. So, okay. I mean, there's nothing really that popular on here. Okay, gold is popular among certain traders, but as far as like an important sector to the market, it's not. So, but anyway, gold seems to be like it's going to be bullish this week, and we've got bear China. Maybe some. I mean, nobody trades Europe really, and Google is saying bullish, saying Asia's bullish, but not really seeing any like impressive, good old fashioned American stuff on here. So let's do the inverse of this and see what pops up for the week coming. We've got, okay, China is bearish. Got FNGU bearish. Labu bearish. South Korea bearish. South Korea tends to be pretty closely tied with the semiconductor index here. Dow Jones Internet bear is bearish, so bullish Dow Jones Internet, bearish real estate, bearish VIX, bearish financials. Okay, seems like, okay, and we've got FANG D. Okay, double FANG is also bearish. So, we didn't get too much of this. You didn't have this impression from the positive side of the screen, but when you invert it and see this negative side, that Stocklabs is kind of looking like it wants to see some downside for the coming week. It's kind of an open question. I mean, I said at the beginning, don't read into the moves too much from this past week because it tends to be like a low liquidity week, low participation trading week. So, it's easy to push the market around wherever kind of the machines want it to go. But yeah, Stocklabs stepping in here, sort of, I think, looking for some weakness to start September. This is a little bit justified by seasonality trends. September is not always. Okay, September has been historically the weakest month seasonally for the stock market. So again, professional traders coming back to participate in the market from their summer vacations. So all the people that sold in May and went away, they will be back on not Monday. Everyone's off for Labor Day. Happy Labor Day. Everyone will be back on Tuesday or making their way back this week. So I would prepare for, kind of anything to happen. I would expect some more volatility in the market to come in this month. And from there, maybe it'll be a buying opportunity again, as the entire year has been, or it'll mark some kind of trend reversal for maybe a multi-week-ish softening of asset prices. So again, keep an eye on bonds, keep an eye on oil, and get ready to trade against the big boys again this week or this month. So that's all from me, and thanks for tuning in. We'll catch you next week. Bye.